I said they've not changed it. I mean, look at it this way. I mean, you buy IT companies, you look out for growth. As of now, Q3 is not indicating that we are in for a bumper Q4. So, Sandeep Sabharwal, let me start with you. Your first reaction to the way numbers have come out. They've not changed their guidance. That's a relief. And that also means that we are not in for a bumper Q4.
Yeah, so I think expectations are low. So given low expectations, now management commentary becomes important for short-term performance. But since guidance has not been changed and given that TCS has a change of guard, we could actually see more interest into Infosys from investors.
Trip Chaudhary's initial thoughts. Abhimanyu Sofath will also be there, but Trip Chaudhary, Managing Director, Equity Research at Global Equities Research, Johnson. Trip, good morning. Thanks for joining in. What do you make of these numbers? Revenues are in line. Bottom line substantially higher. There could be some other income factors out here, probably similar to what happened with TCS as well. Your initial thoughts, Trip?
I think, we should not be euphoric. The IT sector would be a dead sector for a foreseeable future. I think this is a wake-up call. The focus should not be on profitability, because that can be easily done by cost cutting. The focus should be on gaining the market share and gaining the revenues. And I don't see that happening.
So in constant currency terms, they see FY17 sales growth at 8.4 to 8.8%, and in dollar terms, the sales growth for FY17 has been set out at 10 to 10.4%. Sarabjit, just very quickly, does Infi's guidance match up to your expectations? Would it be a thumbs up or a thumbs down for Infi?
I think, if I'm not wrong, I heard that constant currency guidance is kept in similar at around 8 to 9, if I'm not wrong, because I've not seen the numbers. But if that's the case, I think it's in line, if I'm getting the number right. So there's nothing great, neither was expected, not, as long as it's not downgrade, I think markets will not react unless it's a downgrade. So I think if that's just a status quo, then it's decent enough, I guess so.
The dollar revenue guidance has been revised, and it's actually a very big upgrade there. Sunita, if my numbers are right, the dollar revenue guidance was in the range of about 7.5 to 8.5. Now they've taken it higher.
Because I think that's wrong information. What they are saying is that they are expecting it 10.4% at the rate on 31st December. If you look at the constant currency, they have actually cut it. Earlier they had said 8.9%, 8 to 9%. That's what they were expecting. Now they've narrowed the range, and now they're saying 8.4 to 8.8%. So although the lower range has been upped, but upper guidance has been lowered. This is this is this minor tweak that they've done in the constant currency. My analysts were expecting that it will be maintained, although the lower range is slightly higher. So the guidance, this will be the third time that they've changed the guidance.
Sunita, I think so. While the constant currency revenue guidance is still in the band of 8 to 9%, I think the FY17 guidance on dollar terms, I think at the end of Q2 was 7.5 to 8.5. It has been raised to above 10%. This is something that has happened. Now, Urmil Shah, do you want to come in here? I'll then get in Sunita's comments. But Urmil, do you want to come in here? Does this change things for Infosys, or you look at the constant currency guidance being maintained in that band and therefore status quo for Infosys?
Need to understand, because don't think that the US dollar revenue growth can be higher than the constant currency growth given the cross currency movements that have happened. Nevertheless, on the focus should be on the constant currency growth rate, which we believe has been almost maintained 8.4 to 8.8%. It's almost in line with what they had guided earlier.
Now I'm going to just Sunita, let's clear the air. Let's read it off the press release. You have the press release with you. What is the press release saying for the dollar guidance? Let's clear the air for our viewers.
Nikunj, I'm still trying to get the press release. I don't have the press release right now with me. I think the guidance that they're talking about is 10.4%
I think what Sunita was saying was, I think what Sunita was saying was correct, because the FY17 sales growth they're saying is guided at 10 to 10.4% in dollar terms, with the caveat that these are at the December 31 rates. So I think that's where the confusion lies, and I think what Sunita was trying to say was right. We are still yet to get clarity on this, but they've mentioned that these are on the December 31 rates.
Speculate. I need to read this. Till the time I will not read the document, I am not going to speculate, at least on my end, because I need to understand what they're doing. What my understanding is that when they guide and when they take an assumption, they always take the assumption which is based on the last day currency move. Sandeep Sabharwal, let's understand what are they trying to communicate here. I'm trying to understand. It's not reached my mailbox, the press release or the official version, but I think when Infosys indicates something, they always look at the currency rate or the dollar rate the last day of that quarter, right?
Yeah, it's always end of quarter, so there's nothing new, and that's one. Secondly, I think on constant currency being lower than dollar, that's also obvious because the way the dollar has rallied against all other currencies. So obviously with the kind of dollar, the kind of uptick in the value of the dollar and the fact that huge amount of revenue comes out of the US, so on constant currency it has to be lower than that. So I think they have raised the constant currency lower and higher, and the higher end slightly lower. I think numbers are decent, it seems, because the EBIT margin also seems to have upticked.
On the margins, because Q3 was exactly not the best of the quarter. There was currency volatility in constant currency as well, and cost cutting, I guess, and better utilization seems to be helping up because their margins have gone up marginally higher.
Yeah, so the margin performance is definitely very good, and in fact I have the press release. The US dollar revenue growth guidance is 7.2 to 7.6% based on the December 31st rate. So it's not higher than the constant currency growth.
Okay, just the latest updates. So they've upped the lower band of their guidance to 8.4% from the earlier 8% in constant currency terms, and they've lowered the upper band of the guidance to 8.8 from the earlier 9% in constant currency terms. And that is the commentary coming in from Vishal Sikka as well. Let's just read off the note coming in from him. He's saying, taking into account seasonal and other additional headwinds for the quarter, he says our third quarter performance this time around, the revenue performance was broadly in line with our expectations. So very flattish commentary really coming in from Vishal Sikka. It's not like the body language is extremely enthused, and this is much in line with his earlier warning letter, so to say, start of the year to his employees as well, which is extremely muted. That's how I would read it. In the meantime, Praveen Rao, the COO of Infi, says, okay, that's the opening bell. In just seconds from now, we will see what the market's verdict is on not just the index, but more importantly, Infi and TCS. I think they're the bigger news makers. Infi's got a huge thumbs up, 4% higher for Infi right now, even though the numbers largely look in line as of now. TCS, though, has started off a little bit softly. You know what, I'm going to get back to our analysts and, keep it with Infi. 3% higher is where Infi has kick-started. Sandeep, would you say that this is a justified market reaction, or do you think the market is getting a little exuberant with these numbers?
Sandeep, I just want to add, I just wanted to add the point. Now that flash, the FY17 dollar revenue guidance is at 7.2 to 7.6%. I think Sunita was right, as of December 31st rates. Now what they've done is, on the press release, they have given the dollar revenue guidance in 4 different numbers. All the bands are lower than the earlier given guidance on different various currency rates. So now, for the sake of simplicity, and I will want our analysts to come in as well very quickly, we have taken the December 31st rate, and that's the number that we are flashing, 7.2 to 7.6%. Does it materially change things for Infosys, or you are happy with the constant currency guidance?
No, I don't think it materially changes. So what will happen is maybe because of the fact that this 10% got reported, there was some excitement. So the stock might stabilize a bit. But overall, directionally, I think things should be better off from here.
Okay. Urmil, now come in. There is some clarity here. I think Sunita was dead right. But just this, does this change? And then we'll move on to the other market things as well. But Urmil, very quickly. And then I'll come to Sarabjit as well. Thanks, guys, for being patient with us. But Urmil, very quickly, dollar revenue guidance as of 31st December exchange rates 7.2 to 7.6% for Infosys. Your quick thoughts here.
Yes, yeah. So that is in line with our expectations. So I think the stock should react well to it. We have a buy recommendation on the stock. It's our top pick with a target price of 1215. And I was just looking at the key metrics as well. There is a increase in the $75 million plus clients, and while the pricing has gone down, there has been it has been to that extent offset by good volumes as well. So overall, the metrics also look decent for Infosys in this quarter.
Please stay on. We'll talk about Infosys as well, but we just need to mark the other things. So the other Tata Group companies, Indian Hotels, Tata Coffee, I'm sure Aisha has marked these, but I'm just repeating. Indian Hotels, Tata Coffee, Tata Global Beverages, Tata Elxsi. I would argue a trading reaction result of N. Chandra now being at the helm. So you have a stable head at the helm of Tata Sons. I'm guessing all of these stocks would be happy. TCS is a separate case in point. They've lost Chandra. The other guys have, in the manner of speaking, gained Chandra. So that stock, those stocks seem to be doing okay. And just a quick word on anything else on the index. I think on the Nifty 100 as well is the Tata Group companies and IT names by and large which are dominating trade. Infi and Tech Mahindra top of the heap. BHEL is the other one. Aurobindo some gains, 1% higher. I think Sandeep Sabharwal was right, Aisha. Just Infosys just cooling off. That initial spurt because of that whole confusion because of the wires that the growth is 10%. It's obviously not so. And now just a bit of sanity returning to Infi.
Yeah, at 7.2 to 7.6%. That's where the FY17 dollar revenue guidance is at on the December 31 rates. And Sarabjit, just want your final reaction to Infi as well. How would you sum up the performance? And more importantly, what would you tell your clients with this kind of a performance, how to approach the stock now?
Honestly, the kind of performance they have given, it's more or less in line. Guidance is something which Infosys, unlike other company, keeps on giving. So there's activity around it most of the time. So looking into constant currency, which is the one which I track very closely. So I think there is not much big any difference or any shock or even positive. So I guess more or less numbers have been in line with the direction they have set out for themselves. So I think which is positive that because there was a lot of nervousness surrounding the numbers before they came in, that possibly they could not live up to them. So I guess in that case it's a relief. Coming on to our recommendation, we have a buy recommendations because we are positive on IT as a space, and because we believe that there is still Indian IT companies at 55% of outsourcing market. There is still room for them to grow given the cost advantages and the arbitrage that they have, which as a business economics is still intact. So unless there is something which is very extraordinary, irrational happening on a very fundamental basis, IT sector definitely deserves a look, and companies like Infosys have good dividend yield also at current levels. So there is no reason for any fundamental analyst to be negative on the stock actually in given current circumstances. So we have a buy with a target price of 1246. So we are recommending a buy on Infosys.
Okay. Fair call. That's a buy on Infosys. TCS is not having any kind of major adverse reaction, which is good, in the market marginally higher in the session today as well. Okay, Apurva, just one quick thought. What are you doing with the IT names? Infi, TechM, TCS, take your pick.
Yeah, hi, good morning. So our backing order is actually HCL Tech, Infi, and TechM within the tier 1. That's pretty much our pecking order, and that sort of stays. I think just coming on Infi, I think it's more or less in line. I think the fear was probably guidance probably coming down. I think that's not happened. I think there's some visibility for fourth quarter, and what is really important is what happens beyond that. So I think the pecking order remains constant. One of the positives that, looking at the fact sheet that comes immediately is, a very secular performance across verticals for Infosys. So I think that's pretty encouraging, which is not really the case for TCS. So I think that overall, what are the kind of impact that these guys are having on the automation side? Something that a number that Infosys has been disclosing is I think again going to be something to watch out for.
Yeah, indeed. Okay, that's that on TCS as well as Infi. And Infi indeed, by the way, is one of the top price gainers within the F&O band. We've seen a long build up in Infi yesterday as well. Today too, you're seeing a 2.5% traction, and it's very interesting how Infi and TCS trading patterns are emerging right now. Well, Infi is the top gainer, TCS is at the bottom of the pack with not a huge crack, but 1.25% down nonetheless. 84.35 in the Nifty futures, a very tempered move there as well. Of course, at 10 o'clock you can hear out Infi CEO Vishal Sikka live about his commentary on the earnings, what he feels about the future. But yeah, interesting juxtapose really building up in the entire IT space right now, with Infi and TCS both at the diametrically opposite ends in today's trading session. A very quiet start for the markets, 84.22, so very slumber, sort of 15 odd point kind of move is what you're seeing on the Nifty, and just marginal uptick for the small caps as well. So very flattish a start to this Friday's session. But Apurva, Sarabjit, Trip, all of you, thank you so much for joining in and analyzing Infi's performance for us. Apurva, good to have you on the show as well. Sandeep, just one final word then on what TCS is up to right now, and does it seem like the market is justified in sort of selling TCS right now?
I think they are justified in selling TCS, but they won't be justified in selling it too much. So